Inflation, roller coaster markets, talk of a recession has a lot of investors a little nervous right now. What can you do to assuage those fears and create good behavior in bad times? I'm joined today by Dr. Daniel Crosby, my good friend. How you doing, sir?
Great, man. Great. Good to be here with you.
So what is the temperature like right now, and how are investors behaving?
Well, investors are worried. Okay. I mean, investors are about as pessimistic as they've been in a very, very long time. And I think that that worry is real, and it's something we as an industry need to be sensitized to and aware of and ready to respond to.
What can they do to be sensitive to that and also promote better behavior?
So it's really a two-part process. And the first thing we have to do is sort of set that relational groundwork. And the first two steps we can take there are to empathize and to normalize. We all understand what it means to empathize, but normalization is, I think, less understood. And it's basically saying to the client, yes, what you're feeling is valid, what you're feeling is natural, and it's even understandable. I think sometimes we confuse normalization with giving permission. They're very different things, but what we find is if we try to confront those fears head on and label them as irrational or unfounded, people actually double down on that irrational behavior, they double down on that emotionality, and so we actually have to give some credence to what they're feeling and say, yes, I get it, now let's talk about what we can do about it.
Now, if I've learned anything from our conversations, from your books over the years, the human brain is not built to kind of do that. It's got that fight or flight mentality going.
Yeah.
So how do you fight the human brain and really create good behavior when it's the hardest?
Yeah, well, you're exactly right. We are not wired to do any of this well, which is why advisors are so important. So after we've empathized and normalized, then comes sort of the meat of digging into that good behavior. And we have a three-part process. The first piece is all about purpose, bringing them back to their why. We find that if you just remind someone of their values, remind someone of their plan or why they started this investment journey in the first place, they're 50% more likely to stay the course. The next thing we're going to do is we're going to give them some proof, which is the science of investor education. We're going to remind them of things like the more active you are in your portfolio, the worse you tend to do. We're going to remind them of things like the average intra-year drawdown in the S&P is about 15%, which is just barely north of where we are now. So we're going to give them some of the science. And the last piece is we're going to enlist them in a process. We're going to give them some homework around educating themselves, trying to learn and apply some of the things we've talked about. So we empathize, we normalize, we get them back on their purpose, we give them that proof, and then we involve them in the process so they can experience some of this growth firsthand and we can get them on our side.
Purpose, proof, process.
There you go.
And what happens when they push back? What do you do then?
Well, when you push back, you have to honor that resistance, right? Again, there's something where we tend to double down if people just sort of refute factually our pushback. So we can't do that. We see that again and again in all sorts of medical research and other things. So we have to honor that resistance and roll with that resistance. Again, make them understand what they're experiencing is natural, but that doesn't mean that you have to succumb to those emotional fears.
Always fun to talk to the smartest person in the room. Daniel Crosby, thank you so much, my friend.
Thanks so much, Matt.
Awesome. Hey, for Edge TV, I'm Matt Ackermann.